Bitcoin is starting to show short-term exhaustion. Will this develop into a correction? We're going to be discussing that in today's video, alongside two of the most important indicators you need to be watching moving forward. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. In today's video, we are going to be taking a look at Bitcoin on the macro and on the short-term charts, discussing exactly what is happening and what we expect moving forward. There is a very particular indicator on the short term we are watching that could indicate a possible correction is incoming. We're also going to be talking about an indicator on the macro chart that is suggesting Bitcoin is in a significant phase of strength, and we should expect this strength to continue on a higher time frame. So before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion. Pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can find out more about our VIP group. We post trading setups. You can also find an entire video here going into the channel discussing exactly what you'll get access to in massive detail, showing the channel itself. To give you a brief look at the channel over here, we post trading setups with exact entries, exact stop losses, exact targets, trade justification, and exclusive analysis. You'll also get access to the group chats. Again, more information can be found in that video. If you're interested in contacting me for access, you can do so via that same pinned comment in the free channel. Again, it contains the information, the access details, and the trading track record. So go ahead and check it out if you're interested. Let's dive into the video, guys, starting on that market data. So how are we looking for the 24-hour period? Volume is sitting just shy of 100 billion, sitting at a total of 98 billion. This is down 19% in the last 24 hours. And again, as we enter the weekend, we generally do see volatility drop, and we do generally see volume drop overall. Moving over to 24-hour liquidations, we can see 24-hour liquidations are actually still relatively high, which could suggest we did see a little bit of volatility in the last 24 hours. Sitting at a total of 134 million still, 84 million have come from long positions, and of course, 50 million have come from shorts. Looking at the prior 4 hours, we can see the prior 4 hours, we have seen 20 million come from short positions, but in the last 12 hours, the majority came from our long positions. Moving over to the short-term price action really quickly, we can see within that last 24-hour phase, we saw a decent amount of volatility after what was about 4 or 5 days of sideways price action up around this 52k range. We saw again a fair bit of price action within this range. We saw a breakdown. We came down and actually filled this liquidity gap on the VIPV. There was a nice big liquidity gap over here. We filled the upper half of that level, creating a nice new local low before we bounce back upwards to retest that POC, which we are currently rejecting from. Again, we'll discuss this in more detail in the short term, but we can see now how we had a large amount of long liquidations toward the downside. We had a rally back upwards, and in that rally, we've seen now a lot of short liquidations on that last week above that POC level. So we'll come back and discuss this in massive detail later in the video. Moving over to the broader markets, let's take a look at the DXY. The DXY isn't looking too fantastic here, guys. Again, we have seen that perfect rejection from that 105 level as we were expecting. We still expect a breakdown of this 2 to 3 month long uptrend. A loss of this level will result in a correction down to retest these prior lows at 103. You can see already that momentum is breaking down on the RSI, suggesting we are starting to see a considerable amount of weakness develop in the price action, and this exhaustion could result in a loss of the uptrend, and if it does, we would expect a short-term downtrend to follow, and that is what we're expecting still, a correction into this range. This will be bullish for cryptocurrency and bullish for the stock market. Moving over to the stock market, we can see the S&P 500 is looking decent still, about to close that weekly candle over here above 5,000. A good look for the S&P 500. Again, overall looking very high time frame bullish. We are expecting continuations upwards, provided we remain above our prior all-time high. So this is the major high time frame area of support. It does not matter if we come back down and retest it, okay? It doesn't matter if we just go straight up and then come back down and retest it. This is the most significant level of support that needs to be held for us to remain in this macro high time frame uptrend. If we do remain above this level, we are expecting the price to continue upwards on the higher time frame. If at any point we lose that local low at 4,700, that is going to send the S&P back into a downtrend, which could result in a retest of this major uptrending diagonal trend line at around 4,400, potentially 4,500. So overall, looking very, very bullish, provided we remain above this all-time high. We expect the price to continue upwards. On the short term, however, we could be seeing some signs of exhaustion develop. Again, if we look at the RSI, we can see the momentum has been falling for quite some time now, and price action has subsequently been rising. We are seeing exhaustion develop, and we are potentially seeing a bearish divergence develop over here. Again, we do need to see this bearish strength or this exhaustion become absorbed, and we do need to see the RSI break back above this level for the price to continue upwards. Until then, again, this 5,000 point, this psychological area of resistance is a bit of a sticky point for the market. Moving over to the Dow Jones, a very similar scenario happening over here. You can see on the weekly, we failed to get that weekly candle above 39k. This is going to be a very big trigger point. A break of 39k sends us to 40k, guys. Until then, again, while we remain above this prior all-time high, we are macro bullish. So if we come back down to retest, it really isn't too much of a concern. That is still going to be macro bullish. On the short term, however, we are going to be bearish if we break below 37,600, which is going to be that local low of the prior short-term consolidation range we had. Provided we remain above this level, we do expect a break of 39k, and we do expect a continuation to 40. If we do lose that local low, we then are expecting a correction back down to 36 or that prior all-time high. Let's go ahead, guys, and jump over to Bitcoin. So a quick introductory to what we're going to be discussing. We're going to be discussing the short-term price action. We are going to be discussing this entire cluster over here. What is happening within this range? How is the momentum going to be a leading indicator in regards to what happens next? What are our breakdown targets if we do see this exhaustion develop into a short-term correction? And how can Bitcoin push higher on the daily and get past this major 3-day resistance? And finally, we'll be going over the total cryptocurrency market cap for altcoins for the entire market, and then ending up on that major indicator we were discussing at the start of the video, which is going to be on the monthly chart. And that is going to be the baseline of the Ichimoku cloud factored with the market cipher A on the monthly. So without further ado, we'll get into it. A quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump into the video. So today we're starting on the short term and building it up to the macro. We like to substitute it. So on the short term, how are we looking? Very obviously what we have over here is, as you can see, these two trend lines represent our overall uptrends. If we go ahead and just delete everything on the chart, you can see that these trend lines are reflective of the current uptrend we are in. This is going to be our high time frame uptrend line, okay? And if we drop down to a smaller time frame, we can see our short term, which is taking from these wicks across our short term uptrending support line. So we have these two uptrending support lines. Of course, the most important one is going to be this higher time frame uptrending support line. The higher time frame levels always take precedent over the short term, but the short term determine the direction. So thus, this area here is going to be acting as a trigger point. Okay, a trigger point on the short term, and this area here, this trend line here, is going to be representative of the overall high time frame uptrend within the price structure from this orange line forward. So from this orange line forward, this is the uptrend we have been following. So perfect, we have gone ahead and identified that. As for the horizontal levels mark significant points on the price chart. 52,000, again, we know 52,000 to 53,000 is an area of significant resistance represented by these two horizontal levels on the higher time frame. Our next levels of significance are going to be our 46 to 48k level. So 48 over here and 46 down over here. This cluster is going to be a significant area of support. Again, on the macro chart, we can see this is our next area of high time frame support, and those are going to be the key levels we are really watching. So back onto the short term over here, we can see from a diagonal perspective, we can now see we have these diagonal trend lines. Again, we've explained these already, and we have our horizontal trigger points or horizontal levels of interest. So what are we really looking at over here? Well, we've seen a significant rally for Bitcoin. If we go ahead and measure this move out, we have seen a 37% rally for Bitcoin since that 38k retest. Now, 36% for Bitcoin in an upward move is actually phenomenal. It is a huge move for Bitcoin. Think about the entire amount of money that needs to flow into Bitcoin for that to happen. To put it in perspective, for Bitcoin to move a single dollar, $21 million has to come into the market cap. Bitcoin went from $38,000 to $52,000 in a matter of about, well, we're looking at 3 weeks, a 38% rally. So do not underestimate the significance of this move. This was a freaking massive move for Bitcoin in the time frame we have actually seen. So after we see these massive moves, we generally start to see exhaustion develop. It is totally normal that buyers will not always want to step in. We're going to see exhaustion develop as people start to take profits and the buying starts to slow down as people are less likely to buy as we approach these areas of resistance. So the big question is then, will this exhaustion develop into a downtrend, okay, on the short term, or will the selling pressure that is apparent in the market be absorbed by buyers and then push the price back upwards as the sellers step out? And that is the big question we're going to try to answer today. So looking at the high time frame chart, we have to look at leading indicators such as momentum to identify the strength of the trend, okay, and more importantly, any significant shifts in the strength of a trend that could indicate the price is going to move in a different direction than it is already doing so. So looking at this particular structure, we are looking at our RSI uptrend in reference to the period of price action matching that RSI uptrend. So the two red boxes is the period of price action we are observing. If we look at the RSI, we can see the RSI is a reflection of momentum within the reflection of momentum is a derivative of the price action within the cluster of visible range we are viewing. A breakdown of this RSI trend line would indicate that the weakness that has been developing within this consolidation after this significant rally has developed to a point of which we have seen momentum flip negative. This could be potentially leading for a correction downwards to our uptrending trigger point. Now, it would not retest our high time frame uptrend because the high time frame uptrend is only going to be retested as a result of the breakdown of the short-term uptrend. So we would expect a retest of this uptrending support line first if we're seeing momentum flip negative on that 12-hour chart. This is going to be a very crucial level for Bitcoin as it not only reflects the uptrend we have been in since I'm just looking at the date, the 10th of February, which is now 8 days. But it would also validate what we were worried about a few days ago, which is the possibility that we are in a rising expanding wedge. And we know that rising expanding wedges are potentially bearish structures. So we could see that fifth point of a retest on this uptrend with the bearish momentum, which could validate a breakdown. Where would we go if we broke down? We look for this entry point, so point 1 of the wedge, for a potential low target, which could take us very close to, if not to retest this high time frame uptrending support, depending on how long it takes for us to actually correct that further. So that is something very important to keep in mind, guys. We are watching that 12-hour momentum. If we do see that momentum flip negative, and as of right now it isn't, we have to remember, as of right now it isn't. As of right now we are technically still up, we are technically still strong. All we have seen in the short term is some exhaustion develop. This is nothing more than to keep you aware and to be prepared in case it does, so you can capitalize on any direction the market throws at you. And that's very important. This is why I always tell people, it is completely counterintuitive for your own profits to have biases in terms of I am a bear or I am a bull, or I'm on team bear or I'm on team bull. If you do that, if you assign yourself to being a bull or a bear at any point in the market, you are blinding yourself too close to, and it's not always 50, it's close to, because the market is always biased to one direction, but it is close to 50% of opportunity at any given time. If you blind yourself to 50% of the opportunity the market can give you at any significant time, you are doing yourself a massive disservice by being biased in any direction, okay? Now, being biased in any direction is very different to trading with the trend. I have been bullish since 16.5k, and I'll likely continue to be bullish for the rest of the year because the macro trend is upwards. However, I could be short-term bearish and scalp trade a $2,000-3,000 correction while still being macro bullish and holding my spot positions on a long. Very important, you don't lock yourself into being a bull or a bear, as it will only harm your profit making. So that is something I am watching out for a short-term correction. Let's go ahead, jump down over to a 1 hour chart really quickly, and then we'll actually come back to that 12 hour, as I got one more thing to say. So if we look at this 1 hour chart, we aren't seeing all that much happening on the price action. We can see we do have that POC level sitting at the 52k level. This is a massive area of resistance. We 110% need to clear through this level to see a continuation upwards. We have a possible short-term downtrending diagonal resistance developing from these highs over here. Again, I say possible as we only have 2 points of a test, but if we do retest, that will be a third point, and a break out of this level will push the price higher. So for a continuation upwards, we would like to see a clearance, okay, of the price point of around 52,400-ish, 52,350, this horizontal trend line. As a consequence of doing so, we would likely break through that diagonal trend line, which would kill two birds with one stone, metaphorically, and push the price action upwards, okay? A result of that will allow the price action to break back into this high time frame range, which I've circled with the red circle, and potentially break through that major resistance at 52,000 to 53,000, which will propel the price action higher on the macro chart. So one more thing I wanted to go over really quickly on that 12-hour chart is, like I said already, even if we see a short-term correction develop, it doesn't matter. We see a correction into this range, hypothetically, worst case scenario, we're in that 48 to 46k support. If we go back to this chart over here, this area now is a major area of support. For Bitcoin to flip bearish, okay, on the daily chart, we need to lose 46k, okay? For Bitcoin to flip bearish, we need to lose 46,000. From that point, that is a 12% correction from where we are now. So until Bitcoin loses 46,000, okay, we are actually going to have this high time frame support valid. If we go ahead and really quickly explain this level before we get into the macro, because we are running out of time, we have a high time frame range of price action, okay, between 46,000 and 40,000. That is our high time frame range that we were in prior to the consolidation and breakout. We had the deviation high, we had deviation low. Okay, we shorted here, we told you guys this was a trap. We longed here, we told you guys this was a trap. Okay, we have now pushed toward the upside. How do we trade ranges? Well, ranges only become valid again when we break back into them. So it's only the breakdown of 46k which would take this range and put it back into our, what we would call our viable range of price action. Meaning a loss of 46k opens us up to a possible retest of the 40 to 38k range. Therefore, it is irrational to assume we are going to retest this low range of 40 to 38k prior to us even breaking down from 48 or 46. It is completely irrational to assume we are going to go in this direction until we start to see the required triggers or the required resistance supports break that could facilitate that correction downwards. Okay, remember, everything is possible in trading, but you need to define what is more likely and assign yourself to what is more likely at any given time. Okay, anything is possible, but it's not about possibility, it is about probability. Okay, trading is not about possibility, it is about probability. If you're making decisions on possibility, oh, my coin could 100x, oh, I could make $10 million on this trade if it doesn't matter. It's possibility, okay? Probability is what you should care about, because with probability, you can define risk, and with defined risk, you can manage your position. If you manage your position effectively, you can make long-term profit, okay? If you're a gambler, you're gonna lose. Let's move on. So let's go over really quickly to that macro chart, because we are running out of time because I talk too much. So macro chart over here, let's take a look, guys. We can see the one particular indicator we were discussing for a very, very long time has been playing out, and that is going to be the breakout. Let's delete everything. The breakout of the baseline on the Ichimoku cloud is looking fantastic, coupled with the market cipher A50 EMA. We can see, guys, when we push above, we remain above. I'll show you. We break above, okay, we remain above that baseline until we create a high, and then we finally drop back into it. Bear market, okay? So to define it really quickly and to show you from a vertical perspective, bull market started here. Okay, according to a baseline, the Ichimoku cloud. Bear market started here. Okay, this was our bull market. Okay, moving on. This was our bear market / accumulation. Okay, bear market to retest the 50, accumulation, bull market. Okay, bear market to reach the 50. Okay, accumulation, and now we are back in the bull market territory. So according to our baseline Ichimoku cloud, we are actually back in that bull market territory, meaning we do not expect a monthly close below the baseline of the Ichimoku cloud prior to making a new all-time high. Fantastic stuff. Moving back over to the Ichimoku cloud, the market cipher A by itself, we can see that every time we print a blue triangle, we printed one here, we printed one back over here, and we printed one back over here. Every time we print a blue triangle, we actually remain above, okay? We remain above the 50 EMA the entire time until we create that all-time high. Why is this important? Well, if we would break below the 50 EMA prior to making an all-time high, that would tell us the pattern we have seen in the past is potentially breaking, okay? One more thing, actually, before we finish up. Nearly forgotten. I did this last time. Total crypto market cap. Let's take a quick look. Altcoin market cap looking fantastic. Nothing more to say. Okay, it looks great. We have broken above that major level of resistance, a yearly long resistance, and we have cleared that local high. We are now seeing this area act as an area of support. We would expect the price action to continue upwards. Where do we look? Well, we're looking at a very clear level of 650 billion, and then we're looking at a very clear level of 820. Altcoins look great. Moving over to total cryptocurrency market cap, again, we are in this middle range of resistance, and we saw this exact thing play out. If you remember, guys, on Bitcoin, the $40,000 level was equivalent, okay, to exactly where we are now. Remember back to the channel, guys. Remember back to the video. Remember this range. I'm going to show you. This range here, okay, this range here, where we are right here, is the equivalent to where we are now on the total cryptocurrency market cap. Bitcoin's chart is well ahead and truly ahead of everything else, which is perfectly normal when we do see these bull runs develop, okay? We generally see Bitcoin move first, but we are truly in this range. So what do we expect next? swing upwards into this level, guys. Okay, thank you for watching. I hope you have a fantastic day. Like, comment, subscribe. Check out the Crypto Academy courses if you want to learn how to trade. It is a place to do so. And the links to that down below. Catch you in the next one. Cheers.